drawing. I was like, what the fuck? I didn't see this, man. And I was longing Gala. Though I was having a perception to control my position. The market was kind of fishy. But when he sent me his assignment, I was like, wow, you did a great job. And I look at the chart and it was Gala. I was like, man, seriously, you found this? So I was just like kind of proud of you. Martis, kudos to you. All right.
Thank you.
Let me show you guys. It's a brief symmetrical triangle was looking at us here, but we are kind of too dull to identify it. As we are trying to find something big. We are trying to find something big.
So you can blend safely on your kitchen countertop. This makes as well. You can use it to blend your omelette as well as other ingredients used in making babies.
Alright, do you see this now? What we can see this pattern. This is what? A simple what? Bullish symmetrical triangle. This was he made this, he made something like this too. And I was like, why as of yesterday we are kind of looking for this where this chart played out. But that is to tell you that, being dedicated to learn and trying to, solve problems or bring solution to a problem help you acquire more skills. And he was just quick to identify it without any help, just by following the procedures of the Irish symmetrical triangle. So now, if you look at the rules of that Irish symmetrical triangle, like I told you guys before, both the horizontal line, the support trend line and the resistance trend line are converging to each other. That means the resistance trend line is downward sloping and the support trend line is upward sloping. I remember what I said before you can connect your trend line, there must be two lows. And if you want to connect the resistance trend line, there must be two high. So let's say this is our first high. This is the second high. This is our first low. This is the second low. Now, someone that maybe from here now we connect our trend line. Someone that connect this trend line will be able to identify that something like a very symmetrical triangle is forming, which you can use to short the position and make profit. Now, like I told you guys as of yesterday, when it comes to a bearish, if you are trying to short the market, and the bearish is symmetrical triangle, you short from the resistance, not from the support. I showed you guys before there are two ways to enter this pattern. You can short from, let me make it broad. You can short from this resistance here. Why setting your stop loss outside this triangle? No, you shouldn't make it so tight so that weak you will not go and hit your stop loss. Alright? So you should make sure that there is a rejection. Like you can see there are rejections already. It hit the first time, bounce, hit the second time. So it shows that there are rejections. Now someone can short this market, and before you know it there is a breakout. I'll tell you that the way you calculate your profit should be correct. Now let's mark our profit. Like I told you guys before, you mark from, because there is a high, there is no low closely, so you start from here, draw. Now after drawing, sorry. After drawing, I will just clone the line. Then I will take the clone line from the breakout point to know whether it actually hit the TP before bouncing. You see that? Someone that followed the same, that means our TP was here. Our TP was here. You see that? Someone that followed the procedures of taking profit will surely must have taken his profit before this reversal started. And why does this thing always happen like this? Because that's what traders do. So when you get to that point, they will start what? Buying again. Blood pressure will resume, except that it's a full force of what? Cell pressure. So it's just quite simple. The best way you will learn patterns, let me tell you a secret. The best way you learn pattern is every pattern that is taught. Get a notebook, draw the structure of that pattern. Now, just write a brief instructions which is used to identify the pattern, how to use it, how to make entry, and how to make exit. Simple. If you keep doing this on all the patterns and now start to revise them every day, I tell you, in less than 2 months, all this pattern will just look like a movie. Like if you look like a normal movie you used to watch repeatedly. Whereby if you see the movie, say you already know what happened. That's it. That's how the child will beat you. So it's just a simple rule. Just follow the rules, your entry, your exits, your stop loss, and all that. Alright? Another way you can enter this trade is after a breakout and a retest happened. Now you can shop from the retest. But like I used to tell you guys, not all breakout retest. There are breakouts that come with full force, and the two ones have time for that retest. So that's why you try to find those entries inside the triangle when it still was compounding. But at the same time, placing your stop loss in case the breakout break out the wrong side. You won't have to have a huge drawdown. Rather, you exit the trade with your stop loss and accept just the minimal loss. Alright? I hope I've been able to clear everything about this bearish symmetrical triangle before we go into what we have for today. Any question?
100%.
Okay. If you have a question, you can raise your hand. If you have a question, you can raise your hand. So I'll identify you. Onye, all right. You can ask your question, ma'am.
Good evening, Coach. Please, can you explain how to take profit again on this bearish symmetrical triangle? Where exactly to take profit? Please.
Okay, let me go. All right. I said, if you want to take profit, okay, you measure the distance, just a vertical distance between your first high and your first low. That means the distance between here and here. That's what you measure. So the movement, the percentage movement, or let's say the meters movement from this high trend line to your low trend line. That's the determined movement you're expecting once the breakout happen. So what you do is you just use a trend line. Draw the straight line from here to here. Now clone the trend line, make it double. Or even if you don't want to make it double, you can just take that trend line, just take it like this. You understand? Take it like this and go and keep it there. But let me leave this for now because I have one there. Understand? So take the trend line if you don't want to clone it. Take the trend line and drop it here. From the breaking out point. And exist your trade. Either at the edge of that trend line or close to the end. Just anything around the end is where you should take your profit. And not just that alone. Not that you should be taking partial profit whenever you see a support. Alright? Because the trend line might be crossing the support. Then you should also know that the support can bounce back the market. So you should take some profit whenever you see a support before you see your final take profit. So this is just for your final take profit. Partial profit, you take it within the support. Any support you see, you take some more profit. Any support you see, just more profit. Is that clear?
Okay, thank you.
Alright. Another person with a question? I guess no question. Alright. Let's kind of move to what we have for today. But I wish you guys did an exemplary, like try to do it and show in the group and let me see how you guys really did for it. But no one submitted, not bad. It's up to you guys. Let's move to what we have for today. But at least I'm proud. I'm proud of the guy that sent to my team. I really love what I saw in that chat. I was like, every coach himself was not even able to see it. Why on that chat same? Because I wasn't interested in looking at it. I was just surprised, like very very proud. I'm seriously, I'm just proud. All right, let's check what we have for today. This is an example of it. And you can see this is just exactly, it's more like exactly of what we just saw on our live chat. This is a live chat that just happened. You see, yesterday. That was even yesterday. That should be yesterday. The chat of yesterday or day for yesterday. Which, if we have identified it, you'll be able to short the market and make some profit. All right. Please. If you have a baby, mute your mic, please. All right. The next thing we have here. Oh, yeah. Is that
Sorry.
All right. Ascending triangle. We have ascending triangle. We have descending triangle. All right. Now we will start with ascending triangle. They said ascending triangle. An ascending triangle is a bullish chart pattern that consists of two trend lines. Now, that person that I say that made a mistake, that is symmetrical triangle has a horizontal line. That triangle you draw is ascending triangle. Let me remind you, that triangle you draw is what? Ascending triangle. But let's read the definition for you. Ascending triangle is a bullish chart pattern that consists of two trend lines. One, a horizontal trend line at the level of what? Resistance. You remember what you draw, that is ascending triangle. So it's very simple. I tell you guys, if you make a mistake you are making might be another triangle that you are drawing without knowing. All right. They say first one, a horizontal trend line at a level of resistance defined with no fewer than two swing highs. So what they mean is not less than two highs. Like I told you guys, you can only connect your trend line when there is at least two highs. Two says sorry. Two says an upward slanting trend line connecting a series of consisting of a series of swing pivot lows. Hold on. Okay. Okay, the guy I'm talking about, yours should probably be a descending triangle. Sorry, but let's just follow what we read here and continue with the past. So they say an upward slanting trend line connecting a series of higher swing pivot lows. So it means there should be an upward slanting trend line connecting what? Your lows. That means your support trend line should be what? Upward slanting. While your resistance trend line should be what? Horizontal. Do you understand? So let's see the structure. Let me show you how the structure used to look like. This is what the structure used to look like. You first have what? A horizontal line like this, then an upward slanting what? Trend line. An upward slanting what? Trend line. This is how the structure trend lines looks like. So we have made the first and second rule. Let's continue. All right. An upward slanted trend line connecting a series of higher swing or pivot lows. So they are talking about your lows. Background. They said the pattern starts to form when a price action traces an orderly price decline from a swing high, much like a pullback buy. The price then rallies up to a period swing highs and stalls. The second pullback occurs as overhead resistance is decreased and the stop then forms a higher swing lows. This occurs over and over again until a series of equal swing highs and higher swing lows are formed. What they mean is until the highs are equal. That is why your support trend line is horizontal. The highs are equal. Then a power of ascending triangle can be greater after a powerful upside move due to the possible increase of underlying support. Practical use. Technical analysts realize that ascending triangle can be stronger when the swing highs that begins the pattern is also at an all-time high due to the possible lack of future overhead resistance. Traders typically walk into long positions when the price of the asset break above the upper resistance. It's very simple. Look at how it used to look like. Let me get to my chart. Note that when you're doing your triangle, so it doesn't mean that this line must be touching the other line. No, it's not compulsory. Alright? All you need is to be it should be upward sloping, or depending on how the distortion follows. But it doesn't mean it will be touching that other line. It's not compulsory. Alright? Because of people that are getting confused on that. Alright. This is how an ascending triangle used to look like. You start with an uptrend. Alright? It's occurring usually in the context of an uptrend. So let's say the market was coming up. Boom, it hits here. It hits here. Boom, it hits here again. Now they said those highs are nearly equal. That is why you have your resistance trend line as horizontal in structure. Alright? So the second high formed, the second low formed. Now this is when you draw your trend line. Connecting those to your trend line. Now what you expect is it can retest again. Test again, bounce, test again, bounce. You see this one, you are coming closer, making the triangle tighter. And once the triangle is getting tighter, it's now breakout. So we expect a breakout, a retest, and a movement. Alright, this is how an ascending triangle looks like. Remember, it's a bullish pattern. Ascending triangle is a bullish pattern. So it occurs normally within the context of an uptrend, whereby the highs are nearly equal, while the lows are connected by an upward sloping trend line. So the difference between this and symmetrical triangle is their resistance is horizontal. That's kind of the difference between this and what is waiting for what triangle. Alright. You can see the example they gave us here in the context of what an uptrend, bounce, and you expect what? A breakout. Let's see the real life example. You can see the real life example. In the context of what? An uptrend. It hit the first high, hits the first low, hit the second high. You can see the second high, the highs are what? Nearly equal. Now hit the second low. You can see if you connect the second low, the trend line is what? Upward what? Slopey. I hope you are getting the point. It's what? Upward slopey. Now, a breakout what? Occurs and the movement what? Rallies. Alright, let's talk about how to take profit. How to take profit is what? The same with the one of what? Symmetrical what? Triangle. You measure the distance between the high and the low. Clone it or move it towards the breaking out point to determine your what? Your TP. So it means for a structure like this, you measure what? Distance between, you can measure from to make sure that you really take your profit before the market reverse. That's why I always make it smaller, not looking for huge, trying to get all the profit in the market. You measure from here to here. Now you clone it. For me, I always use clone, but you can just move it from there. You clone it, and I will take the clone from the breaking out point to determine what? TP. So it simply means my TP is what? Is here. That's how you check profit on what? Ascending what? Triangle. Now, let's see if they have more tests for us before we go to a real life chart example. Okay, they don't have any motive for us. Okay, let's get to a real life example and look out for ascending what? Triangle. Alright. Hold on, guys. Let me find one. Let me see if I find that on BTC. My network is kind of lagging and it's really disturbing. I don't know why. No. Let's check it out on BTC. Because BTC has been bullish, so I think we should be easy to find it. Sorry guys, I don't used to find these things before class. Just like my days are just busy full me everywhere. So I didn't have the chance to find all these charts before we get to class. Nyeche, Martins.
Yes, I'm here.
Martins. You can be looking at your chart to know that you identify it too.
No problem.
You look here and know that you identify it before me. Skills, if you are there too, you should be looking at your chart to help me. Look out for coins that can have ascending triangle following those rules.
Ascending triangle, right?
Yeah, ascending triangle. Wait, I think PTC. Hello RC. I'm talking about RC. Hello TC.
LTC or GRT?
Okay.
That's one I saw today, sir.
Yes. I that's the one I'm trying to talk about. I think it's LTC. But let me check this GRT. If I don't find it, I'll go to LTC. Because I think there's a chart that Honorable posted that has that ascending triangle breaking out. And I'm forgetting that chart. This kind of look like ascending triangle. Wait, let me connect it.
Expand it. I saw something there.
That of SRP is not it. SRP is bullish wedge.
I think I found already.
Yeah.
That's an ascending triangle.
Yeah. GRT is ascending triangle. I saw it earlier.
That's ascending triangle. That's it. Let me move to a higher time frame. Let me move to a higher time frame so I can be Buddha. Alright, now take a look at this GRT. You can see a clear example of what? Ascending what? Triangle. Now, remember, what we are expecting.
So, you won't thank me, Abby?
I thank you. Is it rap? Is it was rap? Now. So you take class today. What's that for you now? Thank you. I didn't know it was here. I was trying to confirm whether is it was rap voice. Because I actually know your voice actually. Alright. Now you can see the first high has formed here. This is second high, which is what nearly or equal to the what first high, making us to have what a horizontal what resistance. Now this is a low, this is a low, this is a low, this is a low. Now connecting our trend line with these lows, make our trend line what upward sloping, making it having a structure of what ascending triangle. Now what are we expecting? We are expecting. Let me show you expectations. We expect. I myself, I expect something like this. Boom, boom, and boom. Or, sorry, what am I doing? And boom. Or, just a breakout from here. It can happen. You see? So, these are two possible scenarios. It can either come down because as BTC has gone so up, BTC might try to retrace. When you do that retracement, it will make it fulfill its destiny. Okay? Yeah, destiny. So it will come down to test this what horizontal again. And we expect this horizontal to what? Resist it. And once it fully resists it, we expect it to what? Come back here again. It can come back here again and resist it. Resisting it can push it back again to this what? Yeah. So it will be doing all the dancing until the breakout what? Occur. Now when the breakout occur, that means there is a higher momentum of what? Buy pressure. Traders are now what? buying in the market. All right. Now you will ask them now, how do you take in the position in this market? How do you even trade this? When you saw your first two highs and your first two lows, how do you enter the market? Now let me tell you. Since this is a bullish pattern, you buy the support. You don't buy the resistance. So your entry should be within this upward sloping trend line that serve as the support here. So it's either you make your entry here, then you can see the first high, the first low was here, the second low was here, the first high was here, the second high was here. Now the market bounced back again. It's either you make your entry here. Now set your stop loss outside the trend line. The market can dance and break out from here. But whenever eventually it should break out from here, that means that pattern is invalid. And your stop loss should save you from the market. Alright? So the first pattern you can make an entry here is make an entry at the support trend line, which is upward sloping structure. Or after a breakout and the retest, you can now buy the retest here. The more reason why I won't even encourage or advise you making entries at the resistance without a breakout is because there is a very big chance for the market to do make another swing back to the support trend line, which based on your margin, your S margin, you might even get liquidated before the market gets to this resistance, to this support. So whereby is either you miss the trade or you make a gold entry. Choose one. There are traders that love taking big risks. They can even enter this market here. They'll be like, okay, let me buy small here and buy the remainder if the market should get to this point. Not bad. We call it this year. All right. Then, but for you as a newbie, you are scared of losing money somehow. Just it's either you make your good entry or you miss the trade. So you buy the supports. When you come to selling, you sell at resistance. So on this structure now is the buy structure. You buy the supports. All right. Any question? If you have a question, come up with your question. Raise your hand so I can see you. If you have a question, please raise your hand so I can see you.
Please, can you go over it again just a few minutes? Can you go over everything again just a few minutes?
All right. But hold on, let me hear that question first. Martins, what's your question?
This your illustration is on a 4-hour time frame. Sorry.
All right.
4-hour time frame. This is like to conclude this triangle. This took like almost 5 days. No, more than 5 days.
All right.
Somebody on futures, you don't intend to take this long on a position.
It depends. All right. It depends. For example, now remember, your profit taking can even be from here to here. You understand? Most people that trade futures don't even wait for this breakout. They don't know this breakout is a very big movement. This can be up to, let me check the percentage. From here. Let me just check from here. Sorry, I made a mistake. Let me check from here to here. Is 10% movement. You see that? So if the market should get here and you enter the position here to take profit here, is 10% movement. You see that? Now you can just wait for the breakout to occur first and then retest before you buy. So this analysis doesn't mean that it's only on future that you trade all these technical analysis. You trade it on sports. People that do day trading use this to make their entry. Now you as a future trader, maybe you don't want to waste time on future. You can be looking for the structure on the lower time frames. But this was 1 hour time frame. I just moved it to 4 hour time frame because it was big on the 1 hour time frame. So let you you'll be able to see it clearly. And this is a current chart. This is not a past performance. This was a current chart. What is currently in the market right now? So this is kind of what's giving you an analysis on GRT, on what you can do with GRT currently in the market. All right. I hope I cleared it.
Yes.
All right. Emma.
Yes,
Emma, you can
yes,
answer.
sir.
All right.
All right. Good evening.
Good evening.
I perfectly understood how to measure take profit. But can you show us how to measure stop loss? We have been talking about take profit, and I have not still indicated how to measure stop loss too.
All right. Stop loss. Like I always say before, there is no perfect way to measure what stop loss. It's based on your perception in the market. Like there are people that always have large stop loss, especially people that always used to use a ratio 1-to-1. Someone can carry something like this. Someone can place something like this on the chart, and the whole thing like this is an acceptable loss. So your stop loss is based on how much loss you can accept, but it should be something that looks invalid to the chart. For example, now let me give you an example. Let's say I said this. Somebody like me now, I will first look at the last low before the next low that is coming. I will make sure that my stop loss is below it. So I can set something like this as my stop loss. All right. But if I want to make it tighter, that's why I said stop loss is based on preference. How much loss you can accept on that trade, that's what stop loss is. If I want to make it tighter, based on how volatility the market is, let's say I look at this line now, and I saw that market does not usually used to break it, like it's hardly break it. I can decide to bring it closer, more closer to the last low. I can just bring it closer here. Sorry. So it depends on how much loss you can accept. There is no perfect way to put that stop loss. If I try to tell you a perfect way, that means your stop loss will be huge. Like I used to see most mentors, their stop loss are always huge. Whereby if you use the stop loss, it will make you incur huge loss if it should hit. I like, before I set my analysis, I look at my stop loss first. I made it in a way that it is something acceptable. If it hits, I move on with that trade. I leave the trade and wait for another entry. All right. So based on the perception, that's why I always talk about managing your S margin. Because if you don't manage it well, it will make you set your stop loss more tighter because you don't want to incur huge loss. Whereby those losses are being counted based on that your X margin. So that's why I say you use low margin. So you'll be able to put a right stop loss by looking at the chart and try to find somewhere that is an invalid zone for you and place that your stop loss. I hope you're clear.
Yeah, it's clear. Thank you.
Okay, all right, that's good. Sorry, excuse me. Let me put in one or two. Good evening, everyone. Good evening.
Good evening.
It's been a while. I'm delighted to be among you today. Like your coach was talking about determining your stop loss, just like a question asked by Elma. I always say something which he has also mentioned it. Taking your stop loss sometimes might actually determine on your own set-based strategies. Just like he said, also you might even be given a stop loss sometime and you decide to
to readjust it, make it tighter or more looser. That is what we call open low. Sometimes maybe your first lower low might actually be your open low, without you knowing there may be a support below it. So what you do is this: in order to incur, or will I say sustain an affordable loss, you set your stop.
Boarding in progress.
On the margin you are also using. For example, now sometimes in my last class, in the last set, there is something I do tell them. For example, now these are grade GRT. Let's say, for example, that the price of GRT is 1.042 as it stands now, and your first low, let's say maybe the trade is ranging, but about to break out, just like this. Stop loss a little bit above, maybe something like 0.945, 0.945, so that whenever this kind of trade surges up, if depending on the kind of margin you are using, like I said as well, whenever this trade surges up, it will adjust your stop line. Whenever it comes down, before it gets to the support, it will as well rescue you, whereby you have made your loss a little bit tighter, just like your coach stated. Let's say, for example, now if your margin, if your capital is around $50 and you perform this exercise, automatically when dropping or stopping this kind of loss, you may end up losing like $15, whereby taking $35 home. Understand? You might actually be giving this trade at $20, which is about 20% loss, which is about 40% loss. But once you close it a little bit tighter, you will see that the loss will be minimized. That is number one. Number two, before setting a stop loss, sometimes too, you must as well know market direction. Market direction is very, very important. Very, very important. Just like I said, take for example, if this market is ranging, it helps you to determine your own personal stop loss. You must be mindful of the market direction. You don't just set stop loss without knowing your market direction. You don't just set stop loss based on the price or a trade given. You must at a time also know the market direction at that moment that you want to take that trade. Thank you.
All right, thank you so much. I hope you're clear. Very clear. All right. Video.
Good day, my leader. Good day, my leader. Good day, my leader. I hope you're doing well.
You're welcome. Yeah,
my leader. Something that little bit confuses me. It's about when you're zooming. You're zooming out or you're zooming in. You make it bigger or you're making smaller your chart. Because remember, you said we must zoom in order for us to identify which is because sometimes it doesn't show up. If you didn't zoom there and look at the chart. So are you zooming in to make it smaller or you're zooming out to make it bigger?
No, the thing is you zoom in and out to just see things clearer. Anyway, you make it to see clear. Even if it is to change the time frame, you change, like you can see before it was a 1 hour time frame, but because I saw it was big, I changed the time frame to 4 hours time frame so I used to compound the charts. So it won't be so large, you understand, with a lot of charts. So I changed the time frame to 4 hour time frame. So even if it's you change the time frame or zoom in and out, just do it in any way that you should see your candles clear. You need to be seeing all these candles very clear and know what they are. Like we are taught candlesticks, so you need to be able to see those candles. Candles also help you to identify whenever the market is trying to continue or change direction. Like this candle now is excuse, are you there? Can you identify this candle for me? But I know this candle is a bearish candle. Am I forgetting the name already? But whenever I see it, I know it's a bearish candle and I'm ready to short the market. So this kind of candle now give you a confirmation that there is a rejection in the market here, that you should short the market. For people that always use candlestick trade. All right?
All right. Thanks, my leader.
All right. Bungen. Sorry, I may not pronounce your name well, please. You can ask a question.
Jamaica, ngani.
Jamaica. All right.
Yes. I just wanted to ask you, can you see where you have placed your arrows that are going up? Yeah, where you are pointed, yes. There's that arrow that is first going down, and then the arrow then the direction changes to up. How do you know that from that candlestick, that last one, the tiny red one, once it reaches, it's gonna go down and then it's gonna go up? How do we know that the market is gonna change and then start going the upward trend and not continuing going down?
All right. What will actually help you do that is candlestick. All right. Candlestick, indicators, and overall market movement. All right. Now looking at this candlestick, the last candlestick that closed is bearish.
It's bearish.
All right.
Yes.
It's bearish and it's on 4 hours time frame, making it what? Stronger what? Bearish, which means there is a higher momentum, there's a higher chance now that the market can come down to this what? Resistance. So what helps you to determine this is what? Candlestick. That's why we told you guys, you don't just learn one thing and sleep. You need to learn a lot of technical tools, a lot of technical analysis patterns. Compounds, that was why when someone was asking a question, which particular one should you use? We tell them you use everything. You compound every data. That's why you are called an analyst. You compound every data, analyze every data, any possible data that you analyze to determine an actual result. So looking at this now, like you can apply candlestick here to determine whether the market will come down here. Now, for me, I've confirmed that the market should come down, not 100%, but based on the candlestick, the market should come down. Now, what will help us to push this market is BTC. Now, looking at BTC now, BTC has gone way up, all right, and quite kind of in a resistance, which can retrace, and that retracement can help this market to further move down to the support. So another thing that can help you is indicator, something like a moving average or Bollinger Band. We will get that. We talk about that when we get to indicator. But indicators can help you to identify hidden support and resistance. Let's say your indicator was showing support here and got broken, and the next support of your indicator is here. That means it's showing that since the support have been broken, the next support is here. That should attract the market to here. So a lot of things to apply. Let me remove this so you should be blinding now. The candle. You can see already the market is kind of trying to push down. If BTC should go down, it will help you go down. I hope you're clear.
Yes, I can see.
All right, Martins, you have any question?
Okay.
Yes. Not really a question. It's a question, sir. I want to show something.
What's that?
This GRT, but on a different time frame. Showing
what's
the
time
same 1 hour. It's on my. I don't know. It's on my computer here.
If you can find a way to send it to my WhatsApp, snap and send it to my WhatsApp. Let me check.
Okay.
Alright guys, let me get boom. Based on what I've seen,
I've sent it to your WhatsApp.
Is it charity 1 hour time frame? Current time frame now?
Yes.
Current chart.
Yes.
It's the same thing. The same thing is correct now. It's correct. It's just something that will draw here. So There can be a bounce and bounce movement. Let's just move to 1 hour time frame. All right. See that? So the market can bounce here, bounce here, bounce here before what? Breaking out. So it's simple. Imagine your question is answered already. Another person with a question, please. I hope you all can be able to identify. Okay, AZ, you can ask your question. How's that? Whatever. Sorry, I can't pronounce your name well. Ask the question.
Yeah, good day, coach.
Good evening.
Not even a question, but just like in something I noticed, I realized in this triangle we've been teaching us for some time now, sir. I realized that it's either the triangle should be in form of lower high the support, or it's either higher lows to the resistance, sir.
Come again.
What do you say, sir?
Come again, as in repeat.
I said about these triangles that you've been teaching us for some time now.
Mm-hmm.
I vividly realized that about all my research and practical that I've done, I can really say that those triangles are of either higher lows to the support, to the resistance, or lower highs to the resistance.
Each triangle has their own rules. All right, just follow their own rules. I'm not really getting you, but based on what you are saying, triangles has their own rules. We have the bearish candles. We have the reversal patterns, which is triangles are. We have a continuation patterns, which triangles are most of what continuation patterns. We have the bearish patterns and the bullish patterns. Each of them has their own rules. We have treated symmetrical triangle. We have treated bearish and bullish on it. We are not on a ascending triangle. We also have descending triangle. Descending triangle is as inverse of this. All right. So whatever it is, just follow the rules. Symmetrical triangle has two converging lines. That means the support is downward sloping and the resistance is upward. The support is upward sloping and the resistance is downward sloping. While when you come to this ascending triangle, the resistance is a horizontal line, while the support is upward sloping. Just follow those rules. That's how you can be able to identify them. All right.
Yes, sir. Thank you very much, sir. I'm grateful.
All right. Another person with a question, we can be able to even treat the next candlesticks, the next pattern. Another person with a question. Okay, I guess no question. Let's see whether if we can cover one more pattern. There's an inverse of this, so I will be able to. Okay. All right. Descending triangle. A descending triangle is a bullish chart pattern. A bullish chart pattern that consists of two trend lines. One, a horizontal trend line at the level of support. The support trend line is horizontal. So the person that I talked about, this is what you draw. All right. Horizontal trend line is at a level of support defined with no fewer than two swing lows. So a downtrend slanting trend line connecting a series of lower swing or pivot highs. This is what I mean. First, you have First, you have a horizontal trend line. Let me try and make it clear. The This is what the structure looks like. You first have what? The support is what? Has a horizontal what? Trend line. But also remember that the rule of descending triangle is what? It's a pattern for what? Cell. It's a bearish what? Pattern. Descending is bearish pattern, while ascending is what? Bullish pattern. So for you to use descending, it will be in a context of what? A downtrend. Have that in mind. Now, they said the resistance is what? Downward slanting what? Trend line. So it should be like this. It's not a must it will touch. Like I told you guys, it can still be like this. Alright. Now, the market structure should be like this. The market is coming down. It came from up, coming down. Hit the support. Bounce. It has created what? The first low. Now hit here again. Created what? The first high. Hit here again. Created what? The first low. Now remember what? The two lows are what? Nearly what? Equal. This is now when you can what? Be able to what? Connect this what? Trend line. Now it hits the second what? High. At this point it bounces. This is where you can what? Now be able to what? Connect this trend line. And when you connect it, you find out that it was downward what? Sloping. Now it may create the what? The third what? Lows. Bounce back again. Touch the trend line you connected before and bounce back again. Now we kind of what? Expect a breakout, a retest, and a continuation. And a continuation. Alright, this is how the what? Market structure of what? A descending triangle looks like. Always remember the rules. Like I told you guys, you should have your book to write those rules down. That was how I mastered these patterns. Those rules. That's what will help you to what? Differentiate between them. If not, you'll be missing them up without knowing which one is each other. Alright? Let's get back to our book. Background. A pattern starts to form when the price action. No, we have read this before. Let's see what they show us here. You can see what I'm telling you. The descending triangle has what? A support trend line. Which is what? Horizontal is in nature. While the resistance trend line is what? Downward slanting. Connecting a series of what?
Like, are they?
Boarding in progress.
The ball is because there is still a chance whereby the market can what? Bounce back before what? Making a breakout. Now, learning this pattern doesn't mean that there will not be a breakout from here. There can be a chance by any means whereby what? The market will break out from here, making the structure what? Invalid structure, and your stop loss should save you out from the what? Wrong breakout. Any question? If you have a question, Raise your hand. Okay, Zed, do you want to ask a question? But no question. Any question, guys?
I think it's clear, my leader.
Okay, Chinoso.
Okay. Good evening, Coach.
Good evening.
Yeah, my question is now so I want to ask, is there can there be a probability that it can break the upward trend and move on instead of finishing the down one to keep going down?
Yes, there's a chance of that. It can happen. All right, that's why your stop loss is. Market. I can tell you that market is kind of unpredictable, but with skills, you can predict more wins than loss. Do you understand? These patterns now are not 100%, but they have a kind of 70 to 90% win rate of working out. So if you should find this structure 10 times, you should have at least 7 to 9 wins out of it. Are you clear?
Okay, thank you very much.
All right. Any other person with a question? Huh? Okay, that means no question. Let's see our live chat and round up the class. If you know anywhere you can identify the descending triangle, please let me know. In the mind. Descending triangle. I think I found
there's one. You just missed one now. Yes, you just saw one. There's one there.
There's one here.
Yes. It's not the one I'm seeing, but there's one.
This is also a descending triangle. I was really stressed today. Yeah. All right, this is an example of what? A descending what? Triangle. Like I told you guys before, it will be in a context of what? A downtrend. Now you see it made the first low here. Yeah. These are highs. These are highs, but these are highs that we need. It made the first one. It made the second one here. So it's not nearly touched, but it's a high too. So this is the second high. It's kind of bounced back, but it didn't really touch it. Wow. Now this is where it made the major what? Low. Another major low. This is a low. This can be the first one. This can be the first one. This can be the second one. And how you want to do it. But you can see once you draw this trend line here, it rejected the market here. But because it's a descending triangle, as it compound this market more tighter, it break out. You see it? Instead of breaking out here, it break out from here. So, like I showed you guys before, not that it doesn't have a chance of breaking out here, but when it break out here is invalid. So that's why I always tell the students, trade structure. Then use what are resistant to help yourself. If you just focus on trading structure, you have more wins than too much losses. But if you leave structure just to try support and resistance, then it will be a complicated market for you. But when you see a structure helps you to know what the market is trying to do, or what they put your host for the market. When you see a bearish pattern, you know that the market is turning bearish. When you see a bullish pattern, you know that consolidation that is forming is what? Bullish. Whenever you're seeing a consolidation, does not mean it's bullish. No. It's going to be bearish, it's going to be bullish. But only a pattern can help you identify whether it's bullish or what? Bearish. Are you clear now? Any question? Okay. Now let's talk about our take profit. Take profit is still the same. You measure from here to here. Now clone it. I'm moving from the breaking up point. What do you see? You can see that what? Sorry. Alright. You can see if you check it here. You can see what? It hits the TP before what? Bounce. Why it seems longer here is because this upper chart is more compounded than here because of let me let you understand better. This upper chart, there are too many movements here, and the screen cannot show it all. So it's compound the upper side. That's why if I move the trend line upper, it gets compounded automatically. If I move it down, it gets spaced automatically. To tell you that here is the upper side here is compounded in the chart. So if you bring it down, it still shows you the correct movement based on the price. Alright? So you can see that it hit the TP before bouncing back. That's typically what a trader will do. Someone that showed this market that everybody, you know that buy pressure should be what? Yeah. But it doesn't mean it doesn't give you a signal to buy you, but the signal for your what? TP. Are you all clear?
Yes, sir.
I believe no question. So that means tonight we are able to cover what? Ascending triangle and descending what? Triangle. This is your assignment. In a single coin, identify an ascending triangle that occurred and a descending triangle that occurred. Please try and do the assignment. Submit to the group. Once I come to the group, I will mark the ones that were perfect. If I identify a mistake, I will correct those mistakes on our next class. Alright, guys. Good night.
Quick question, boss.
Have sweet dreams. Okay, quick question.
Sir, a question, please.
Okay.
I wanted to.
Someone has a background noise. Please off it. I'm wearing a earpiece and it's really stopping, please. All right.
When you come to the group, okay, can you mark them one by one that maybe this person did it wrong, this person did it right, so that you can be able to identify that I was the one who did not do it well, maybe I was the one who did it well. I think that one will actually help us a lot.
The thing is, you guys doesn't submit at the same time, and there will be a lot of messages, and I have limited time to respond to them one after the other. So what I actually do is I will look those ones that look perfect. I will mark it as perfect. Those ones that I skipped, that means it's somehow imperfect, and I'll just pick up the error, and during the class I'll talk about the error, and you that made the analysis, we know that you are kind of wrong. Or you can also try, maybe you can send it to my DM, but there is something that comes with it. The thing is that I might not be able to see your message. So if I skip your message, please don't be annoyed, okay? It's not intentional. Most times we have a kind of low shell, and the limited time we have to respond to message, it's very hard to be able to respond to all, and most times most of the message will be very, very down. So we try to respond those ones on the top, or those ones that their message look enticing or important, very important. And see, if you want your message to be responded very fast, don't send long voice notes, please. I used to see people that used to send long voice notes. When you see someone that you will send up to 3 voice notes, and and when I come to that, I'll have to listen to it all. Please, I beg you. If you want to make your short notes, if you want to make your voice notes, make it brief or preferable type, so I can just quickly read, and I'm not having to be on a voice note when I'm supposed to be doing something else. So if you want to make a voice note, make it brief. Just make your point brief or preferable type. You understand? So that once I get your turn, I'll be able to reply. Just